Hello traders, you are welcome back to the Forex Geek channel. If you are new here, don't forget to hit that subscribe button and give this video a thumbs up, okay? We've got a great one for you today. In this particular video, we are going to look at a tool that every Forex trader should consider having in their arsenal, and that is the Price Zone Oscillator, okay? In this video, we just break down exactly what the price zone oscillator is, how to use it in your trading strategy, and why it is a game changer for identifying key market zones where price action is likely to shift. So if you are ready to level up your trading game, let us just jump right in. Okay, we're going to start by defining what the price zone oscillator actually is. At its core, the price zone oscillator is a technical indicator that helps traders identify key price zones in the market. Well, what does that mean for you? Essentially, it helps you spot areas where the market may experience a reversal or trend shift. It's not just about where the price is right now, but where it is likely to go next based on historical price action and momentum. Now, unlike other oscillators, which focus purely on overbought and oversold conditions, the price zone oscillator focuses on the price zone, as the name implies, right? Meaning specific areas where price tends to gravitate or reverse. So when you use this oscillator correctly, it can give you a visual representation of these key zones, allowing you to make better informed decisions on when to enter or exit your trades. All right, now that we know what it is, let us just talk about how to use the price zone oscillator in your trading. Now, the first step is to set it up on your chart, obviously. Most trading platforms allow you to add the price zone oscillator, one way or another. If it is not readily available, you might want to download it as a custom indicator and add it to your chart. Okay. If you are using a platform like the MetaTrader platform, you might want to download this indicator from a third-party provider, and then you add it to your indicators library, after which you have to restart your terminal and add it to your chart. But if you are using the trading view, you can just come here to indicators and just search for the price zone oscillator, right? And then, of course, you select it and it's going to appear on your chart right there. Once you have it on your chart, it will typically display, this is the adaptive price zone oscillator, to be specific. So you're going to see, this display right here in the indicators window. All right. Now, it is important for you to understand the zones that is identified by this indicator. All right. It will typically show you two main types of zones: the support zones and the resistance zone. So support zones basically are areas where price has previously bounced back up. If the price is approaching a support zone, the oscillator may signal a potential reversal upwards. You can see now. Let us just look for some practical examples. Now, this is a zone. When this indicator gets to this point, showing this green zone, it shows that there is a resistance zone. Can you see? You can see that this green coincided with this resistance zone. This red coincided with this support zone. This green coincided with this resistance zone. The red, and so on and so forth. So basically, the green represents resistance zone, the red represents support zone. So when the indicator enters this territory and starts showing this green zone, just know that the price is likely around the resistance zone. And same for the opposite is the case of the red. When it gets to this red zone, it means that the price is likely around a support zone. Okay? Because remember that support zones are areas where price has previously bounced back up, while resistance zones are zones where price has previously struggled to break through to the upside. Okay, so you can also mark those zones manually on your chart, okay, where you have multiple rejections. Okay, now it's important to also combine this indicator with other indicators. The price zone oscillator works best when combined with other technical indicators such as moving averages, MACD, or RSI. While the price zone oscillator helps you identify where price is likely to move, using additional indicators will give you more confidence in your trade decisions. For example, if the price zone oscillator signals a support zone, right, and then maybe you are deciding to add RSI to the chart, and perhaps your RSI, shows oversold condition, that could be a good time to consider going long. Conversely, if the oscillator signals a resistance zone and maybe the RSI is in overbought territory, that shows that it's a good time to enter a sell. So why should you use the price zone oscillator? There are a few key reasons, okay? One is that it helps identify key price zones. As we've discussed, this indicator helps you identify areas where price tends to reverse or consolidate. So knowing these areas can help you make smarter entry and exit decisions. Secondly, it gives you a visual representation of market sentiment. The oscillator helps show the general market direction. Is the price likely to push higher or will it turn around? So by reading the price zones, you can gauge the market's mood and adjust your trades accordingly. Thirdly, it works across different time frames. Whether you are a scalper, day trader, or swing trader, the price zone oscillator is versatile enough to work on any time frame. From the 1 minute chart to the daily chart, this tool can help you spot potential reversals at any level of your trading strategy. Okay, and then it also gives context to other indicators. Many traders use multiple indicators to confirm their analysis. The price zone oscillator adds another layer of confirmation, helping you avoid false signals and increase the likelihood of a successful trade. Okay, now let us just go ahead and look at a quick example to see how the price zone oscillator works in real time. All right, here you can see that the price is approaching a support zone, for example around here as indicated by the oscillator signal. So notice how the price has previously bounced at this level. You can see it previously bounced at this level. This is a clear indication that the market sees this as a strong support level. Now if we combine that with a momentum indicator like the relative strength index, which shows that the market is oversold around this territory, can you see that? We can be more confident that the price could start to reverse upward from that level, and you can see that it was actually that reversal. So this is a great example of how combining the price zone oscillator with other indicators can help you make a more informed trading decision. To wrap things up, the price zone oscillator is a powerful tool that can help you identify key price zones in the market, support and resistance levels where price may reverse. When used correctly, it can give you a clear edge in your trading strategy by providing you with an early warning of potential price changes. All right, remember the price zone oscillator works best when combined with other indicators like moving averages, RSI, or MACD to confirm trends and potential reversals. So make sure you integrate it into your overall trading strategy if you wish. If you found this video helpful, make sure to hit that like button, subscribe to the channel if you have not done that already. We've got plenty more Forex tips and strategies coming your way, so stay tuned. And until next time, happy trading.